Thanks for joining me, Daniel, Mike, and Hanif. So as we think about today, we look at FIG as a lender, Telus as a telecommunications company, and Symend as a collections company. We're here talking about embedded insurance. Walk me through, let me understand, what does insurance mean inside your business? Is it something you're looking at, you're focusing at, and what are you doing about it?
Yeah, happy to start. Morning, everyone. I mean, if you think about, what is the one product that's most complementary to a personal loan, creditor insurance really, is up there on that list. At FIG, we're a very customer-centric company. We like the fact that it's an optional product. It makes sense for some customers, but not others. It obviously is an incremental source of revenue for us for our loans. It also helps us mitigate delinquency risk as a result of the payouts that happen due to successful claims. So for us, it's a great product that we can offer to customers, offer directly through our loan origination journey. So it's really a win-win for both our customers as well as for us as a company.
Yeah, maybe I can be next here. So, at Telus, we don't do only telco. We do a bunch of services. We have healthcare, we have pet care, we have smart energy platforms. We offer a bunch of services to our customers. And because of that, it's very important for us to provide supportive experience to them at the times when they need this the most. So you just showed on a slide, a lot of people have just $200 in their pocket, right? So we feel that customers are not looking for us to solve their problem, but they're looking for us to give a tool to solve this problem. And that's why embedded insurance is a natural extension of our services.
So I'll give you a little bit of a primer on what Symend does, because I think that context is going to be important. So we're a customer engagement platform where when people first drop into past due status and delinquency, that early journey happens on our solution. So we build these hyper-personalized campaigns. We encode behavioral tactics in them, which is important because that's like the method, the most effective method by which you can influence behavior and nudge people towards an outcome. And then we deploy those strategies, we learn from the data, we learn and iterate. And that's kind of fundamentally what we do. The scale we do it at, we work with banks, telcos, and utilities, is, we've cured something like 200 million delinquent journeys. We operate with some of the biggest, we've collected like 40, 50 billion US dollars of delinquent past due accounts on our system, and we operate in Europe, US, and Latin America, and Canada. And what we've seen, we've been in business for the last 7 years, is that what happened through COVID with consumer purchasing power eroding because income simply did not keep up in any of these markets with inflation, kind of put people in a very levered position where elasticity and their ability to absorb things like the $200 thing in Canada got significantly worse. And we're in the business of curing people, right? So all of a sudden you're in this world where that uncertainty, because now you're more levered than ever, and then all of a sudden you're worried about AI taking your job, you're worried about the Trump effect and all these other kind of economic shocks outside of a business's control or a customer or consumer's control. So customers are feeling more nervous than ever, and more of them are entering delinquency than ever before. Behavioral science is amazing. I really believe in it. I studied in school. That's why I started the company. But it's not a silver bullet for everyone. If somebody loses their job, me nudging you more effectively if you have no money in your bank account isn't going to solve that problem. So we were like, well, if we're in the business of helping these customers, what else can we do? And what else we can do is we can move from curing customers to preventing it. So we've launched a new product called Symend Prevent in partnership with Walnut. And there, right after people cure, we basically, in this high context window, we introduce insurance products where if for a small premium on their monthly bills, if something bad happens to them, the insurance company actually pays their bills directly until they get back on their feet to get their next job or what have you. We believe it's going to be a pretty effective thing. The psychological aspects of it are that when you've insured future uncertainty and you've offloaded that risk, your willingness to buy more, your loyalty to the brand, all of these things become tailwinds to the original organization that we serve. So we're pretty excited about it because it's very complementary to the original mission of the company.
Thanks, Hanif. I think that's an important context in what you were mentioning in terms of how to support consumers. Daniel, as you were thinking about FIG's roadmap and your path forward, how are you thinking about that protection and what the consumers are needing inside of your realm?
Yeah, absolutely. So I think maybe an important point to make is that the number one reason why our customers are getting a FIG loan is for debt consolidation. So they are at times worried about being able to make their payments. They have multiple payments. They have multiple credit products. So we provide them an easy way for them to do so. We also embed. I think creditor insurance is a great product that is embedded directly into our loan journey. It is something that for us being a fully digital lender, it's crucial that whatever we provide through our experience continues to be fully digital. So we could provide one unified experience. We help customers consolidate their debts through a single payment. And then at the same time, we also provide them that optional credit insurance product to give them some of that downside risk. From the user interviews that we've done, the main reason why customers are opting in for credit protection, I should say, is that they're worried they're not going to be able to make their payments if they lose their job or if their financial situation deteriorates. So for them, it's a great option to opt in for credit unsurance and have that downside risk.
If you don't mind, I just want to build on this. So we, as the VC investor, see a big trend of, unbundling financial services and rebundling this into customer experiences. And that's why we're always puzzled why so many companies, including the telcos, leave so much opportunity on the table when it comes to the customer experience. And when we look at the embedded insurance at the very beginning, we were like, wow, this is what actually flips the model. This is what actually allows you to turn this passive cost center into active revenue stream, but most importantly for the big brands like Telus to enhance the customer experience. So completely agree with that.
Mike, can I pick on that a little bit more? And you're thinking about when Telus is looking at new products, but also from the global ventures lens in terms of investment. How did it come to be around insurance is that next product? And insurance is something that we see. Were you hearing things from customers? Were you seeing kind of delinquencies rise? Like, what did that look like?
Yeah, it's, we are corporate VC of Telus, so we definitely have a lot of information from our business units. And when we had this theory about this unbundling and rebundling financial services, so we go back to our business colleagues and ask, what do they see in the market? And what they saw in the market that, as I said before, customers were looking for the big brands, not to protect them, but to provide the tools to protect them. And in this economy, in this environment, and everything that you hear in the news, they want to feel protected, and it's basically our job to provide this protection to them. I will also say, as the number of services we as the big brands supply to our customers, as this number grows, so grows our opportunity and ability to provide supported care for them. So when it comes to the next product, we'll always see how customers will react to it. And also, what can we do to make this wholesome experience, to make this protected experience? And that's why Telus was thinking about insurance for the last 4 or 5 years. But it was really important for us to find the right partner to do it with.
And if you mentioned a bit about, of course, curing customers as they're going through that delinquency process, but also working to prevent them. Why did you see prevention as the next stage for Symend?
So we have already implemented this solution. We're gathering all of this data around what behavioral tactics work for what kind of person. We are profiling customers based on that data. What that means is that we know how to nudge them. We know how to get them to do a thing. And we, when we're dealing with these large companies, say telcos, they're in a very competitive space. And so if you already have the platform, and the sole mission of your platform is to nudge and influence behavior, extending that capability to nudge them towards the next logical thing that's going to create stickiness with the organization and create revenue and net bad debt. If you think about creditor protection in the case of a Telus, on the front end, they're going to participate in the premiums. On the back end, the claims are a direct offset to net bad debt. And along the way, they're basically creating a stickiness that not only affects in-vol churn due to delinquency, but vol churn because their products are now bundled and insured. So the likelihood that Rogers is able to snipe their customers with a promotion is lessened. So every step of the way, it makes a ton of sense. And there's no technical lift if they're already using our solution to engage with those customers. So it's like a natural thing. And to their point, it changes collections from a thing that has a cost to becoming like effectively a profit center. What's really interesting is we're working with one of the largest auto lenders in the world in the US right now. And the conversation with them was, we don't want to make money on this. We don't like it. And I went away and they said no. And I was like, oh, well, what do I do now? And then I thought about it, went back to them and I said, well, then don't make money on it. Take the revenue and put it back into the solution, reduce the price and offer it as a benefit to more people. And they hit the bid on that right away. And they're like, let's have the next conversation. So the configurability of this has a lot of power in it too.
I think what we're talking a bit is about some new products which are income loss style, so it's singularly protecting you against an income loss event or a job loss event. And then things like bill payment protection, which is, again, a newer product to market, not as widely distributed today, at least in the Canadian framework. And I know we do have loan protection as it relates to FIG. What do you see as these new products? How are you thinking from a digital aspect that the consumer is relating to them? Are you seeing value in terms of what they're mentioning around that? I'd love to know your perspective from that consumer lens.
Yeah, absolutely. I think, offering credit protection digitally can be challenging, right? I think at times it could be a hard product for the average consumer to understand, right? So if you want to do it effectively, it's really finding the right balance between being very thorough and providing all the needed information for someone to make an informed decision, but also creating a very simple experience for someone to opt in or opt out of. With our customers, I think what they appreciate is the simplicity. They like the fact that it's a simple product, it's a simple process, it's easy for them to understand. We provide the right amount of information, and we also don't make them jump through hoops if they want to opt out, right? So I think if you provide a very easy opt-in, opt-out process, you make things very transparent, and you don't make them jump through hoops to, if they want to opt out, if they change their mind, then it creates a really great experience, and then they see the value of the product. As opposed to you trying to sell it to them, it's really you communicating the benefit to them, and then, creating that optionality for them.
I was going to ask you to elaborate, Mike,
Yeah,
so
absolutely.
Please do.
From the telco world, imagine how much time, effort, and money was spent on building these customer experiences, making sure that the customer experiences directly fit what our customer wants, right? And we were doing it for years. So for us, when we think about a new product, including insurance, we don't want it to be a simple add-on. What we want it to be is embedded in the core experience that our customer have. And from what we hear from our customers, they really like how we do things, and we prefer to do things this way going forward. And I think this is very important to understand that it's not going to be additional add-on. It's going to be embedded in the core experience that we drive.
Maybe to build on that, sometimes we see and we hear that it's a complex process to embed this inside the infrastructure. We know that if it's going to be a front-end experience, it's going to be embedded in that financial institution, the telco's experience, the collection company's experience, that there's a huge lift. Maybe walk through your perspectives on that. Of course, there is this lift, but there's also an ability to do it quite quicker and easier, I think, today than maybe what we've traditionally seen. I don't know who would love to start with that one.
Yeah, I can take it. So, obviously we work with Walnut, right? We leverage their APIs to provide the product. The integration work itself is quite easy, right? That's the easy part. I think the hard part is figuring out from a user experience standpoint, how do you offer credit protection effectively, right? So it goes back to, what is the right amount of copy that you provide, at what step of the flow do you provide it, right? So for us, obviously, we're very cognizant of drop-off throughout our application, right? So how do we optimize that? How do we ensure that offering this additional product and maybe creating additional anxiety if we're overwhelming the customer doesn't result in someone, dropping off. So, I think the integration, that the APIs are great, and it's really easy to offer creditor protection as part of your experience, right? So it's a unified product. Someone doesn't have to leave to, a different website or have a completely different experience or go through multiple steps, right? You can have it as a one-step process within your existing flow. But the challenge, I think, is figuring out all the other nuances, the copy, the compliance piece, dealing with claims, a lot of the edge cases that I think maybe don't come up right away. I'd say that's the biggest challenge. But for us, being fully digital, we want to make sure that there's no human intervention throughout the process, right? So for us, every decision that we make is all about how do we optimize for it being digital and how do we not throw people at the problem.
And if I could add to that, so I come at it I think I'm blessed in a way because we're embedding it in an existing tech stack. That existing tech stack's in the business of nudging people towards an outcome and learning and iterating. So our existing platform is actually very, very conducive to this because we're leveraging a lot of the insights and the learning and iteration machine to kind of drive it. When we got into should we do this? We were like, okay, so we went down this deep rabbit hole of what makes insurance successful. And one of the guys who invests in a ton of insurtech gave me some advice. Insurance is sold, not bought. You have to present it at the right context window. You have to hyper-personalize the message. You have to have deep data so that you can learn and iterate. You have to have trust, and you have to have a great enrollment flow and user experience. Those are the attributes. So then we worked backwards from those attributes and said, how much of that can we enable on our platform? And we went down the checkbox and said, well, we already hyper-personalize. We already know how to nudge customers. If we embedded and leverage the things that you said about how to learn and how to make the user experience seamless, agentless, highly transparent, easy to get in and out of, then one by one we have all of these attributes. And then the key is to control the distribution so that as you see the data on where people are coming in and where they're dropping off, you can leverage that data to do a lot of experimentation and learn and iterate quickly, right? So I know people who have been in the business of outbound selling insurance for 10 years, and they're still tuning their systems. So I spoke to a lot of those folks. I figured out what they've learned, what worked and what didn't, and ultimately we tried to mimic that on our solution.
And it's fun that you mentioned distribution because we are the distribution, right? And obviously we struggled with exactly the same things, and some of our workflows are very complicated. So Jill, thank you for you and your company to support us here and being a great partner to us. I also want to mention that for us as the distributor of these products, it's very important to make sure that we capture all of the data points that come in from the customers so we know when they drop out, why something is going wrong, whether there was a marketing issue or there was a product issue, and supply these data points back to our partners because, by the way, Telus works with both Symend and Walnut, and really happy to see both of our portfolio companies here.
What I mentioned in the slides, and I know there's been some new individuals in the room, we're starting to see globally, you see quite a bit in the United States, a lot of earned wage access companies, utility companies, others that wouldn't be traditional to those that are here in the room. I think, and we're here sitting in maybe a non-traditional fintech or financial institution space. What do you think is valuable for those in the room to be taking away in terms of how that market is increasing? We're seeing quite a bit in the US and starting to see new entrants in Canada. I'd love to know what others are hearing and thinking when you think about those in the room in terms of takeaway thoughts.
I can take it, yeah. So I think it's important to understand that a lot of big brands right now realizing that they want to play a more active role in the financial well-being of their customers. And this is something new, right? Telus was never thinking about itself as the financial partner, but now, given all of the trends happening in the industry, we see a bigger desire from the senior leadership to make sure that we protect our customers. So for everyone in the audience, I just want to say that this trend will continue. We'll play a more important role here, and we want this experience to be embedded in our core offerings. I think it's very important when you try to kind of win us over, if you like, and talk to us. This is how we think about these products right now.
I'm going to put my Canadian proud hat on for a second. What we're seeing across our customers here is they're very nervous. There's a whole bunch of things out there in the market that they have no control over. And forecasting it is almost impossible because you wake up every day feeling like you're shell-shocked. And anything we can do to support those customers, this is going to be an economically very beneficial thing for you to explore with your customers. But honestly, helping them in this, like we have companies now in the US, very large ones, where they're looking at if we can get the price of this thing low enough, can we make it a free benefit to everyone? People, this thing about protecting against future uncertainty when the world is very, very uncertain is going to be a huge benefit to consumers if done correctly. So it is a social good. It is the textbook example of doing good to do good. So I encourage all of you to explore it with your customers.
Yeah, I would say, data for us is king, right? So when we look at these, uncertain times, U.S. tariff wars, right, I think, consumer proposals are up, consumer confidence is at an all-time low. For us, it's what we're able to control, right, which is really focusing on the data in order to optimize our credit models to ensure, we are lending to customers that can actually pay back the debt, having better predictability of our delinquency for our existing loans, right? So when the money goes out, how do we look at the data and how are we proactive about determining which loans are more likely to go delinquent? And then I think the last part of that is, for those customers that do go delinquent, what are the treatment plans that we have in place for them in order to help them through these difficult situations, right? So I think that's one area where we're really paying attention. We know that Canadians' balance sheets are strained. So what can we do, and how can we do our part in order to help them through these difficult times?
And just to add to that, we ran a bit of a research on how top of mind is this for the consumer. In Canada specifically, the search for this type of product on Google and AI tools, just since the beginning of this year, has surged 400%. So this isn't something that you're going to have to do a lot of convincing to nudge people towards. I think that in this particular moment in time, given all the uncertainty that I mentioned before, we're seeing the data that consumers are actively looking for it.
Maybe to build on some of the data points, we also worked with several partners in terms of them surveying their customers to understand would they have an interest in a protection style product. And I think over 76% of customers said yes. And that's something that you wouldn't have seen prior. And I think all of that comes down to, though, how is it embedded in the customer experience? How does it feel seamless to the customer? How is it presented at the right time? And how is it not adjacent to any of the flows that you have in the experiences? And I think that's the critical piece when you think about insurance, is it needs to be timely, relevant, and really critical to that customer. I know Gary's here staring at me, which tells me we're up on time. But thank you. Thanks to everyone. Thanks for sharing. I really appreciate you being here.
Thank you so much.
Thanks, everyone.